Good morning friends, welcome to Sharekhan pre-market view. Indian markets had a choppy kind of a session yesterday and ended marginally down. We had Sensex which closed down by 64 points while Nifty had a cut of about 6 points. Even if you look at the cues from the overseas market, they are pretty mixed. Dow yesterday ended up marginally up by 13 points, Nasdaq had an 8 points gain while S&P was flat, putting on a gain of about 1 point. This was after better than corporate earnings numbers there. However, the fall in the commodity price, especially gold, which went down to 5 years low, even the crude price traded below $50 a barrel, weighed on the overall stocks which were affected by this commodity fall. So net-net, we are not having any major cues from the US market. Even if you look at most of the Asian markets, they are trading mixed to flat. SGX is also indicating a flattish kind of an opening by a positive 4 points. We have cues, however, for the Indian markets. The monsoon session of the parliament begins today, and the development there would have a definite impact on our overall markets. Also, index heavyweights are likely to announce important numbers today. We have Infosys, HDFC Bank, Lever, even Asian Paints, Kane India, some of the index heavyweight which constitutes about 18% of the Nifty weight, which are going to announce their numbers today. So any bearing in terms of the outcome of this companies would have a bearing on the index. If you look at the flows yesterday, FIs continue to be buyers in the cash market. They pumped in 715 crore in the cash market. They were seller to the tune of 134 crore on the index future, whereas DI were seller of 849 crore in the cash market. Now, given this overall backdrop, let's have a view from our derivative desk as to how Nifty is likely to trade throughout the day after a flattish kind of a move.
Good morning friends, we'll give an analysis on derivatives. Yesterday we have seen Nifty starting up with the positive gains despite mixed cues from the international markets. But however, soon after the first few minutes of the trade, we have seen Nifty taking some kind of resistance at higher levels and has seen some selling pressure over there, and due to which we have seen Nifty breaching below 8,006 levels in the mid part of the day due to selling in many index heavyweights like PNB, Bank of Baroda, Kane and Tata Motors. Due to which we have seen Nifty making a low of around 8575, 8576 odd levels. But however, with positive cues from the European markets, we have seen Nifty taking some kind of support at that level and bouncing back and eventually closing above 8600 at 8628. Yet another closing above 8600 and on a flattish note. And we have seen an hardly gain of around 0.04%. Now the open interest terms, we have seen an addition of around 1.5%, that is 3.5 lakh shares were added in open interest. However, cost of carry have increased significantly from 5% to around 11 odd percentage. That is, Nifty premium have came up from around 17 odd points to currently 23 odd points, indicating some kind of long build-up was observed by market participants in yesterday's trade. While in put-call ratio, we have seen some kind of softening in put-call ratio, which decreased by 1 basis point from 1.22 to 1.21 levels. And volatility index have also have in line with market showing some kind of volatility in the narrow range. FC volatility index have increased by around 1.5% to 14.96 levels. Now the options activity, 8,800 call option is now highest in terms of open interest. That is that the build-up has now shifted to the highest strike price of 8,800 strike price. But 8,600 and 8,700 call option have also seen some kind of addition of around 2% and 1% respectively. Now the options, we have not seen much of addition or reduction in open interest, as there was a muted performance by market from the last 3 consecutive trading sessions. We have been seeing market have been closing in around between 8625, 8626 odd levels. So a breach above today's high, yesterday's high of around 865060 will eventually trigger a fresh upside for the market. Hence we have to watch that levels, and a breach below 8550, 8525 levels will see some kind of selling pressure. So watch out for that narrow range. Until that, in the narrow range of 8650 and 8550 levels, it's a no trading zone for a market. Now the put option, we have seen and we have started seeing some kind of unwinding in the high put base. That is at 8,500 strike price, we have seen an unwinding of around 1%. However, the unwinding was quite minute, but still it was not worthy since it's the highest in terms of open interest. While 8,600 strike price has seen an addition of around 5% in yesterday's trade. There are two securities in bank period for today's trade, that is Antec Auto and India Siemens. FIs have been not so active in index future from the last couple of trading sessions. In yesterday's trade also, there were net sellers in index futures of around 134 odd crores, and the selling was mainly due to some kind of short positions was been added as the open interest of FIs and index futures went up by only 1%. Index options, there were net sellers of 697 odd crores, while stock futures there were net sellers of 687 crores, and stock options there were net sellers of 24 crores only. Our 5-day gap stands at 8575. Remember yesterday's low was also at 8575, 8576 level. So this level would be quite crucial in today's trade of 8575, which is our lower range, and the higher range at 8706, which is the higher monthly straddle break-even point. SGX Nifty is trading flat to negative by around 5.5 odd points at 8620.50, indicating some kind of flattish opening can be expected in today's trade. That's it from derivatives. Thank you.
Friends, let's have a look at the trading ideas for the day. The first one being Bharti Airtel. Now, as per media reports, Bharti Airtel has entered into exclusive talks for sale of 4 African units to Orange. The deal as of now is not announced, and these are exclusive talks as of now. However, this is sentimentally positive news for Bharti, as it means more deleveraging of the balance sheet. One can long Bharti with stop loss of 422 for potential upside of 442. Now, Ministry of Defence has approved transfer of technology from DRDO to L&T for commercial production of Lakshya pilotless target planes. This is positive news for L&T, and one can long it with stop loss of 1852. The potential upside could be between 1880 to 1895. CCL product has come out with its result yesterday post market. The numbers are pretty good, with sales being at 219.6, while the PAT was above consensus as well as Bloomberg estimate and came in at 30.2 crore versus expectation of 23-24 crores. The stock can see some positive action today in trade, and one can long it with stop loss of 191 for potential upside of 203 and above that at 207. Sun Pharma, some negative news there. Yesterday the company came out with a profit warning saying that the top line of the company might remain flat vis-a-vis last financial year. This is due to the integration with Ranbaxy and certain expenses which were incurred as a part of the remedial measures which the company had to take to fight off the US FDA things. So overall the company is still exploring getting out of and selling off the low margin business. However, this profit warning is negative and the stock might react negatively in trade today. We can short Sun Pharma with stop loss of 959. The potential downside could be anywhere between 933 to 920 range. Moving on to important news, now there is some news on the GST thing. Select panel arrives at a middle ground on GST, with Rajya Sabha committee moves 1% extra tax only on the interstate supply of a consideration. Now the overall measure also states that the state should be given full compensation of revenue loss for 5 years. So some middle ground coming in there, but we'll have to wait and watch because the monsoon session begins today, and there are already overall news that there could be disruption in parliament today. IOC is likely to invest another 1,000 crores to raise its stake in Chennai Petroleum. SpiceJet Ajay Singh, which had pumped in close to 800 crore earlier, has pledged 1/3 of its holding and continues to explore various options in the way to fund the company. Now, defense and banking is out of the composite FDI cap to avoid quick money. Presently in the defense sector, FDI limit is 49%. The West Bengal government transfers hydro project to NHPC. This gives a lift to states center's mega merger plan. Yesterday Kitex came out with its numbers. The numbers were extremely weak. The top line saw a growth of only about 6%, and the bottom line growth was of about 10.6%. This is way below the consensus estimate, and the stock would react negatively in trade today. Watch list that we've created for the day: stock with positive bias we have Mindtree, Havells India and Motherson Sumi, whereas stock with negative bias we have Allahabad Bank, HUL and DLF. Stock for long-term investment we like Aditya Birla, Nuvo, Glenmark, HDFC Bank, Reliance Industry and TCS. Important results that we have to watch out for, and the numbers that are expected from the street. Lever expectation is 1088 crore PAT, HDFC Bank estimate is 2,705 crore of PAT. Infosys estimate is 3,116 crore of PAT here, and Eicher Motor, the estimate is about 228 crore on the PAT front. That's it we have today. Thank you.